to be stronger in this area than that area. That's it. Okay, has everybody back?
Yeah.
Good. Right, we are winning. We're getting there. We're completing the audit. I promised to keep the introductory thing on the slides down to about 20 minutes or so, and then we'll do another example. But I just want to start off this afternoon, if I may, on completing the audit with a brief look at what it is that we're trying to do and how it fits in. Remember, obviously we've been doing planning, yep. And then, if you recall this morning, I was saying that we'd missed some stages of the audit out because Bassant's going to be dealing with those in future weeks. So the whole way in which the evidence is gathered during the audit, he's going to cover. So I'm now jumping ahead. So we've gathered all of this evidence in accordance with our plan. And what we're doing now is completing the audit, right? And so that really is the focus of the next 20 minutes or so. So let's have a look in a bit more detail about what we're doing, why we're doing it, and a few more specialised areas that I'll touch upon because we're not going to cover them anywhere else and we need to get them in somewhere. Okay. End of the process then, we've got all of this evidence from all of the tests that we've conducted. What do we do? The first thing we're doing is we're saying, right, have I got all of the evidence that I actually need in order to give an opinion upon these draft accounts? And so what the auditor needs to do is carry out a detailed review of the audit working papers and consider them in the light of the financial statements to say, what is this telling me about the accounts? Have we done enough? Have we got sufficient amount of evidence? And then going on from that, what is this telling me? So the first question perhaps is, these financial statements we've been reviewing, have they been compiled in a way that's consistent with what's required, both by legislation and by the accounting standards? So all of the stuff that identifies how the accounts are to be put together, have the management in producing their draft accounts done what they needed to do? Specifically, we're also asked, part of our work, to consider the accounting policies. That's the basis upon which the accounts have been put together. Are they right? Do they provide a true and fair view? And then we're back down to this point that we've covered already. Are the financial statements materially correct? Do you remember that material means, is any difference that might still exist between what is actually right and what the account's saying sufficiently small that it wouldn't be of interest to the user of the accounts? Okay. So what we have to do then is, when we've done all of the detailed work, we carry out what's called here an overall review of the financial statements. And that really is, if ever there was a challenge about whether sufficient evidence had been gathered, the first place you'd look would be this review. There would be evidence that the auditor had considered the overall financial statements to ask whether or not there was sufficient evidence there that the conclusions from the audit evidence provide them with everything that they need properly to give an audit opinion. Okay? That really is the fundamental slide about the completion stage. Have we done enough work? And secondly, what are the results of the audit evidence? What do they say about the accuracy of the financial statements? Yep. Sufficient work. What results? I want to touch, that's the fundamental about completing the audit. I want to touch on 4 or 5 more specific things which crop up because they don't fit in anywhere else, basically. So, ISO 620, in some cases, the auditor needs to rely, to a large extent, upon other specialists. Suppose, for example, a fundamental part of the accounts is about the value placed upon, I don't know, a fixed asset. Okay, we've got a large office block or something of that sort. The financial statements carry that at a valuation. Now, auditors are not valuers. So somebody has gone along to a valuer and said, please, will you provide us with a valuation as at 31st of March 2015 or whatever it might be of this office block. The question is, what is the auditor supposed to do about that? Because they don't have the skills to second guess that expert. So what this is looking at is what you need to do before you can place reliance upon the work of somebody called an expert. My example was about the valuers, but actually there are a number of different experts that we may need to rely upon. Valuers, surveyors, actuaries, they deal with pension liabilities, and lawyers. The lawyers might come up, for example, suppose your client is in a legal case, the lawyer may have been asked to give a view about whether or not they're likely to win. We don't know, we haven't assessed the evidence. But nevertheless, the auditor may want to place reliance upon somebody who does have the skills. Okay? So, what do we do? And this is what ISO 620 says. You may effectively take account of the work of the expert, but you need to do certain steps before you can place reliance upon it. First of all, we're saying, is the information made available to that expert the same as what appears in the financial accounts? So, for example, the valuer may have been asked to provide a value at a particular day, 31st of March 2015. Fine. Is that the date on which we're reporting? It's quite often we find that the valuer was asked to report 31st of December, but our accounts were March. So there's an inconsistency there. So what we have to check is to make sure the instructions to the expert are consistent with what we need for the accounts. Right. Secondly, what you do, and I'll jump over 2 because I've really dealt with it, looking at 3, what we're saying there is have a look at the way in which the expert has been instructed and make sure what that expert has been asked to do is what we need as well. And then we're asked, has the specialist qualified his opinion or expressed any reservations? So, for example, that lawyer I talked about who was asked to review a particular case, have they actually said the most likely outcome is £10 million that you'll receive? Or have they said, if they said 10 million and 10 million is the figure in the accounts, this is good. If they've said, I don't really know, and it could just possibly be 5 million, and management have just ignored that bit, then that's a problem. So any reservations that the expert has built into his or her opinion, we need to be sure we've taken that into account. Effective date needs to be consistent, and have they properly picked up what it is that they said. Okay. So let's have a look at what each of the 2 parties is responsible for doing. It's for the specialist to say the basis upon which his work has been done is appropriate. So suppose you're doing assessment of the pension liabilities of a company, then it's for the actuary to say this is the way in which those liabilities should be calculated. Okay? The auditor, on the other hand, then can't say, well, he said it's right, so it must be right, that's good enough for me. You have to do a certain amount of work yourself. So, what you have to do is obtain, as it says at the top there, a general understanding of the way in which the specialist has gone about his work. And then to ask yourself whether, on the basis of your non-specialist view, that seems reasonable, and it's consistent with everything else that you know. So if the pensions chap has gone along and has reviewed the liability for 500 people, but we know that it's actually 1,000, you say, hang on a minute, is this liability assessment really complete? Because you know other things that expert hasn't taken into account. The specialist, as it says there, must be made aware of the fact that the auditor accounts the evidence, but, and this is the point really, it's down to the auditor. You can take account of the work of an expert, but you can't get rid of responsibility. So what we've got there is, as part of the completion stage, we've gathered together all of the evidence that we've got, and then we've asked ourselves, are we taking the word of an expert in any particular area? And if we are, done these additional tests that we're required to do. Okay, that's quite enough. You probably won't need the detail of all of that. Just be aware that in some areas, like with valuers and actuaries and lawyers, there are people with specialist knowledge whose views have been reflected in the accounts. And we can't just take their word for it. We need to do some things ourselves as well. Right, let's go on. You might have noticed the managing director was expressing outrage. He was being asked to give something called a letter of representation. And I said I'd come back to it, so I am. What it is a summary of all of the things that have been told to an auditor by management during the audit. So they may be fairly general, like a statement that the auditor has been made aware of all of the liabilities of the organisation. There's nothing else that they've squirreled away and aren't telling us about. Or it may be more specific about a particular activity. For example, there might be a court case being fought, and the management is saying that we have made you aware of everything we know about the likely outcome of that particular case. So in a number of areas, because there isn't anything definitive in writing, as an auditor you have to go along and ask management what they think. Because you've got a right to do that. The problem you then sometimes have is months and months later, they come along and say, what about this? And it turns out that something completely different has happened, which nobody expected. If you've got a letter like this, you can point to it as an auditor and say, well, you told us this, and you've signed you told us this. At face value, isn't really our problem, is it? So really it's a record of everything which has been said to the auditor during the process. And as you can see, it takes the form of a letter, comes from the directors to the auditors, and it's signed by the directors as an indication that this is a fair summary of what they said to us. Okay, just spend a minute, if you would, reading that bottom one. Estimates, areas of judgment, for example, if there's doubt about a particular area of the accounts, like the recoverability of debts, this is management's best estimates and why. What happens if they don't provide it, like that guy was threatening not to provide it? If it's absolutely fundamental, we could reflect that in the audit report at the end of the process. Because the first thing you do is, if they won't sign up to what they have told you, if they won't put it in writing, it begins to raise question marks, really, doesn't it? Why are they not prepared to put it in black and white? It makes you a bit suspicious. If it's a really big area, and there's real doubt about it, and there's no other evidence, then you could be saying in your audit report, there is no evidence other than what management have told us, and they refuse to confirm what they've told us in writing. And we'd say, apart from that area, we're happy with the evidence we've got. So if they won't confirm in writing what they have said to us, that really could be significant. Okay, how valuable is that letter? The problem you've got, of course, is that what you're doing is basically using this as evidence from the directors to inform what you're going to tell to the shareholders. But the whole point of an audit is it provides an independent review of the accounts for the shareholders. So if all we've done is take the word of management, it's not really the strongest piece of evidence, is it? It's not really independent. Yeah. So it's what's described. If all we've got about a really significant area, one that's material or high risk, is the unsupported word of the management, that's not great. It's not sufficient. So what we need to do is to see whether or not what we've been told evidence, or at worst, why it's different from what we've learned elsewhere. Okay, so that was management representations. Really it is a letter that confirms what we've been told during the audit. One or two other points. Going concern. People come across going concern at all? Probably not. Let's start at the very beginning in that case. Going concern means that something is likely to exist for as long as we can tell. So we've got company A. As far as we know, there's no reason to think it won't happily carry on trading for years to come. And that's important in a way. Suppose you've got trading stock. You can value that stock, assuming it's going to carry on being used as it always has been. If you reach the point though where it's going to cease trading, you might have to sell that stock off more cheaply. So the value on that stock would be lower. Similarly, if word got round you were stopping trading, it might be a lot harder to recover your debts from all your trading partners. Yeah. So again, you need to reduce the value at which you showed those debts. So the accounts suppose that we're going to carry on trading for the foreseeable future. Question about how you define foreseeable future, as it says there, is open to debate, but to get rid of that debate very briefly, it's basically 12 months from the time you sign the accounts, unless you know any better. So one of the things you ask yourself before you actually formally sign off is there any reason to think this company isn't going to carry on trading? And if the answer is no, there's no reason to think that, great. If there is, then we need to do something about it. Why might you start thinking some concern? Well, all sorts of things. There's half a dozen different examples there. It's the sort of thing, it's common sense really. Recurring losses. If you've got any money in the bank, is nobody actually giving you any orders? All of the staff pushed off to a competitor. All sorts of things that might make you think. Again, what you need to do as part of the audit work is prove that you've thought about whether the company is likely to carry on trading. ISO 570 tells it all, much posher. And what it's really saying, this is good stuff, this is, basically the auditor's first time is to say, it's not really for us, it's a question for the directors. The directors too need to assess whether or not there's any reason to think the company won't carry on trading. And then what we do is write down how the directors have done it. Yeah. So we have a going concern basis in preparing the financial statements for various reasons. If it should be there is some doubt, then we need to disclose details about what those doubts are. Suppose there has been a problem. I mean, for example, this often crops up when you've got a subsidiary of a holding company, and that subsidiary relies for its funding upon continued support by the holding company. What you'd be looking for in those circumstances is a letter from the group to say we will continue at least for the next 12 months to provide the funding that this company needs. If it hadn't been for the existence of that group company, there'd be a big question mark about whether it could provide the funding it needed going forward. Okay, so that slide there, which again I'm not proposing to go through in great detail, provides you with more detail about what you would do in the event there was a question about going concern being appropriate. Compliance with accounting standards and statute, we seem to have said this several times now. Basically, we are there to make sure the statements comply with all of those various bits of legislation and standards. And in practice, what the big firms do at least is they'll have a big checklist to say, this is the requirement of the standard, prove that these accounts actually comply with it. What you also have to do is look at the accounting policies. Can you come across accounting policies? In each area in which there is a policy, we look to see what that policy is, whether it's an appropriate policy, and whether or not the accounts have been prepared in a way which is consistent with that policy. Nearly there, a couple more. On disclosures, remember all those things that I said we had to disclose, like the amount of directors' fees and things like that, and the audit fees, a whole list of them. What the auditor again needs to do is make sure that everything has been disclosed which should have been disclosed. Right, and now we're moving on. At the end of all of this, we produce a report. It's called the ISO 260 report, because yet another of these statements on auditing say that we have to produce a report of everything that's cropped up during the audit to those charged with governance. So they're the representatives of the shareholders, bodies like the audit committee. So at the end of the audit, we go away and we think, right, what would shareholders be interested in? And we compile a report that says, this thing we didn't agree with the accounting treatment, these errors were noted in the course of the audit. In the future, you need to be aware that disclosure is changing, and a whole set of issues of that sort. And then the audit committee receive that report and often use it to grill directors with to say, what are you doing about this, or how did that error arise? So basically, anything that's of concern in the audit file doesn't just stay there. We send a letter to the company to make sure that something happens as a result of it. And those are the sort of things which you would expect to see in the report. It's also used as a way of making clear to the members where the audit hasn't gone as you would have expected, or where the fees have been greater. So, the very last thing, final slide, the completion of the financial statements, looking at the accounts again, we're saying, are they right? Are they properly prepared? And are they consistent with the evidence that we've produced? And only at that stage do we decide what form of audit report we're going to be producing. So there's quite a number of steps and processes that need to be put in place between the end of the detailed audit work and the point at which we draft the audit report. And I've just skimmed fairly lightly through some of them at least, certainly the main ones. Now, I know there was quite a lot to take in and it was quite technical, but I thought it was important that you got some sort of flavour about what those steps looked like. So maybe because you've got the slides at some later date, you can go through those again to make sure you understand at least the basic principles of what is going on. Okay. The final session is going to deal with the drafting of the audit report and what that might look like. So that's the end product of the audit. But before we get that far, can we please look at the next little example, which is called mud packs. What that is saying basically is, it's expressed in the form of a tender. That's not really right. What I want us to focus in on is, in this example, what were the risks? And in doing our final review, we need to go back and say, where were the risky areas? And let's look to see, to make sure we've got all the evidence that we need against those risky areas. Yeah. Read it through, and then perhaps I'll say another word or two. Okay, so what I'm looking for on this, for number one, I've got 5 risk areas, right? The areas where we need audit evidence in particular. See if you can find 5 areas of high risk in the audit of mud packs. And then I want 2 sentences which summarises what a letter of representation is. Okay, and then the final one, having got our 2 sentences, 2 bullet points about what we would expect to see. A couple of examples we'd expect to see in a letter of representation.
Emphasizes mission and research. The one is also the synthesis in some it brings high quality expensive products. So high quality expensive products means almost every skills. The inflow of money would bring less inflow from or it would be diverted to cleaner, they produce quality and expensive goods. So a lot of people worry about them. See, market funding the sale profit goes to goods as small and will increase competition and falling demand.
Second is right.
The law. I got it here. Yeah, no, it's not. See, we are answering the question as the auditor, not the management of Mazda. I answered as the management of Mazda. So that means the risk is not you. The risk is not
Because we need to ask someone because long-term water rights.
you.
Is it true they have long-term water?
Oh, that's the risk.
Never mind.
That's the risk. Correct. So, that's right.
Okay. People had at least a bit of a chance to look at it. I appreciate it was quite a lot to cover and not very much time to do it in. So to summarise, what we were doing on mud packs was first of all thinking about 5 or so key risk areas, so that when we're comparing them with the evidence that's available, we can focus in on those risk areas to make sure we've done sufficient work. Yeah? This will be coming around in due course, incidentally. So for me, probably the 5 key areas. First of all, I want to look at the cosmetic stock, because we know it sells what's called here high-end, extensively packaged products. And there must be a risk that because they have struggled recently, they've got more stock than they know what to do with. Growth for stores, it says. There's more competition. So I suppose 2 things. First of all, can they sell all this stock at all? Or secondly, in order to sell it, will they have to reduce the price? So the first risk area is about saleability, if that's a word, of the existing cosmetic stock. Is that all clear? Secondly, we know they already have a bank overdraft, and we already know that they are struggling in terms of sales. So what does that mean? In principle, the bank could call that overdraft back. So there's a question mark, to my mind, about whether or not there are implications for the level of liquidity, in other words, whether they can carry on financing all of their, all of the expansion plans that they currently have. The third thing down there, you see that the bank had a charge. Let's replace it. It said the company owns the freehold of its factory and shop, but the shop premises are subject to a fixed charge to support a bank loan. I think I want to know about that bank loan. Have we actually been able to carry on making the payments under that loan? Conditions attaching to a loan. Have we actually defaulted against any of those? But more information about that bank loan and the charge, that is, what it is that the bank has said they will do in the event of keep up making the payments. I think that's the third of my risk areas. Let me just scroll up, because I think for some people it's easier on the screen. Now, do you remember what we were saying about going concern? Is there a question here that Mudpacks continues to be a going concern? We know it's struggling, we know it's had to spend quite a lot of money in introducing new products. So I think I would want to be clear that its projections for the next 12 months prove that it will be able to carry on going. So a fourth risk area is this company actually a going concern? And finally, we know it's been modifying its product range, and we know too that these maggots, strange, these maggots are attracting a good deal of opposition. So I think the whole process whereby they're investing new money into new products, what that expense is done and how they're treated, that will be my final area where I want to gather audit evidence. Okay? So, parts B and C. We were saying a letter of representation. Essentially, it's a summary of everything we've been told by management in the course of the audit. Except it's put very much more nicely there. But just as a recap, letter of representation, piecemeal audit evidence provided by management to provide assurances about the continuing operations of the company and any material balances on which the auditors require audit evidence. But for you and me, it's what the management has said to us during the audit. And then what might be in the letter of representation, just a few examples quoted there. I think we'll probably go on and on, but the fundamental ones would probably be about the going concern. So the directors have assessed whether or not they're going to have the money to keep on going. And that's the one thing above all that I would want assurances about. Okay. Again, quite a lot comes out of quite a small example, I think, there. As I said, clearly we have a handout here. I will put that as well on the Moodle along with everything else. So at some time, and certainly during the revision, I would recommend that you go through all of these again to make sure that they make some sense. You understand more, therefore, about identification of risk, planning focus that provides, and what a letter of representation actually is. Okay, people fairly comfortable? Yes. Good. Right, if you are, can we just have 1 minute while I find the slides, and we'll go right on to audit reporting. Okay, so this is the culmination of all that work, the audit report that of course goes from the auditors to the shareholders, the members of the company. First of all, as part of the completion process, you remember what the auditor was doing was saying, have I got sufficient, reliable and relevant evidence on which to base my opinion? Because if ever it goes wrong when your work gets reviewed, that's exactly what people are going to be looking at. Was I justified in forming the opinion that I took? Going on to the report, what the report has to say is basically one of those statutory things. So it's come from both the 1985 and recently the 2006 statute and law. It's also covered by ISA 700, just the background. Right, what does it say? No surprises here because we've been through all of this. The Companies Act say that the auditor of an audit report must say whether, in the auditor's opinion, a financial statement has been properly prepared and whether to show a true and fair view. Coming in a minute just to recap on what that true and fair view meant. What the Companies Act also does, which is a bit less clear, is say that's what the report has to say, but if some things aren't in place, then you also have to report them. If they are in place, you don't need to report them. So that's what's called reporting by exception. So if there's no reference, there isn't a problem. You're required as a company to maintain proper accounting records. Right, and there's a definition of what that actually means. But basically, is there a sound and robust accounting system in place? And as part of the audit, we will review that. Concerns, we say so. If you haven't got concerns, we don't say so. Secondly, if we have issues about whether or not we've got a company with a whole load of branches, is it the organisation has kept tabs on what? I mean, I once audited, for example, a chain of opticians, and they had about 150 shops scattered all over the United Kingdom, and one central office. Now, how do you go about doing the audit? Obviously, you go to the headquarters. You can't reasonably visit 150 different shops. So what you were looking at in practice was weekly sales returns and weekly returns of expense for each one of the 150 shops. Yeah. So my question there was, have we actually got sufficient evidence about what has been going on in each one of these shops? Actually, we were happy in the end that they did have sufficient information. But what the organisation needed to demonstrate is that they were getting adequate returns, so they were in control, despite the geographic spread of all of these different shops. Thirdly, it's pretty obvious, isn't it? If you produce a set of financial records and they're not consistent with what the accounting records say, you've got a problem. So 99, in fact 999 times out of 1,000, it's not an issue that actually arises. If it were to be the case that they just made these numbers up and they bore no resemblance at all to what the accounting records say, you would have to report that. Never actually seen it done. And this is a bit obvious too, really. Have we obtained all the information and explanations that the auditor requires? Again, if you haven't, you've got a problem. You've got sufficient evidence. If you haven't, not only would you have to report it, but you'd also have to restrict your opinion to those bits where we do have sufficient evidence. And finally, the accounts, if you've looked at them, I've got several bits. There's bits we report on, and there's bits that we only occasionally report on as auditors. So obviously the balance sheet and the profit and loss account we always report on. The director's report will also contain financial information. We've had a really good year in which we've achieved turnover of £7.34 million. What the auditor needs to do is make sure that 7.34 million is the same as the number on which they have reported in the audit. If it's actually 4.26, we need to draw attention to that because the directors are trying to mislead, basically. Again, it's not something I've ever seen happen, certainly not on purpose. Sometimes we give an employees report, for example, in quite a lot of them, and sometimes numbers will have minor discrepancies and things of that sort. But nevertheless, what we're doing is looking at all of the information that goes around with the report, with the annual statements, to make sure that overall they're consistent. Again, that bit at the bottom for completeness. Right. So that's what the Companies Act told us we have to do. I mentioned ISO 700, and that's got some more things that we have to do. It's the same old point, really. Before we give our report, we're drawing together all of the conclusions from all of the evidence. And ISO 700 says we have to express an opinion. We can't duck out altogether. So it's whether or not we've got a true and fair report, and whether or not the financial statements have been properly prepared. And we also have to use the date. I'll come back to the date. Not as easy as you might think. Okay, what else? First of all, we address that report. Not a huge surprise, this. But essentially, it hones in on exactly who we have a duty of responsibility to. So just to remind you what we were looking at this morning, we're reporting specifically to the shareholders or to the members and to nobody else. Because as auditors, we don't owe a duty of care or responsibility to anybody else. A couple of other things. The term independent auditor. I mean, that's helpful simply to reinforce the fact that the auditor is independent of management. Okay, so let's have a look at these reports. Excuse me, first of all, a little paragraph that tells us what it is we've actually audited. So it says, for example, we have audited the financial statements set out on pages of whatever it is to whatever it is. So that just reinforces the fact that we have looked at the balance sheet, the cash flow statement, the notes and things of that sort. But there may be other things as well, like the director's report or other material. So what the introductory paragraph is making absolutely clear is what is within the scope of the audit and what falls outside. And then we're saying here, yet another piece of clarity. Financial statements are fundamentally the responsibility of management and not of the auditors. All the auditor is there to do is express an opinion. So just as we had with the letter of engagement, just as we were saying in the fundamentals of audit, it's management's responsibility to prepare the accounts. All the auditor is doing is coming along and giving a view upon those accounts. Same point really, that point 1, distinguishing between audit and director's responsibilities. We all need to say about that one. Right. What are directors there to do? Let's just have a minute to read that. So they produce the accounting framework. And first and foremost, the directors take judgments and make estimates to reasonable and prudent. Then to maintain proper records. We talked about safeguarding the assets a little while ago, didn't we? Okay. That should have been a bit of a refresher, really. Right. How do we as auditors go about our work? Well, we followed international standards of audit. And then we've got some splendid wording here about obtaining reasonable assurance. So we're not providing, as I've said before, a blanket guarantee that everything is right. But what we have done is plan our work so that we had a reasonable chance of making sure the material misstatements, ones that are significant, didn't actually happen, and the accounts are not wrong regardless of how that error arose. So we put that too in the report. Okay, and then we go on with a brief description of what audit is actually about. So what we're doing is obtaining evidence. So we've tested that. We haven't done each and everything, as we've been saying. We've ensured that the accounts are properly supported by all of the various transactions details. We've had a look at the principles, and we've assessed the estimates to make sure that they're reasonable. And we've pulled all of that together to provide an overall evaluation of the view given by the financial statements. So that's explained basically what it is that we have been doing. And now, opinion. True and fair view. Talked about that endlessly. Do these accounts provide a true and fair view, which is consistent with a financial reporting framework, which takes us right back to have the accounts been properly prepared? Do they apply? Do they comply with any relevant statutory requirements? And at the bottom, you have a date. Which is always good fun, really. Because the date is the date at which all of the work has been done. Yeah. And it generally it's the same day, so that land auditors both sign on the same day. Previously, there has been a debate. You sign first. No, you sign first. If you both sign on the same day, it makes it easy. But fundamentally, because the directors prepare and audit only reviews, if there is a difference, then directors have to sign first, and we can go on second. Right. And then, if it all goes wrong, we need somebody to blame. So we say who it is who's done the work, and we identify the city in which that office has been done. Because obviously a lot of audit is done by firms with branches scattered all around countries and indeed all around the world. And what we do these days, and I still think of this as being relatively new, is you sign in the name both of the firm, but it also identifies the individual who has provided that signature. You used to just sign, for example, PricewaterhouseCoopers, but now you'd have to sign D. Newman, PricewaterhouseCoopers, and at least in the UK, we also sign registered auditor. So that's the very bottom, assigning responsibility. Just a quick recap, and I will skim through this quite lightly. This true and fair view thing, what we're saying is that every company is required by the Companies Act to ensure that those statements provide a true and fair view, both of the snapshot of assets and the balance sheet, and also the profits or loss in the year finishing on that date. Right, what do we mean by true and fair view? Again, have we followed the right principles? Have we followed accounting standards? I think that's really helpful, that definition of true, not false. It's hard to disagree with it, isn't it? Yeah. The long, boring debate, really, so let's not go there. What do we mean by fair? Not dark. Yeah. Free from that. I mean, it's probably one of those that you know it when you see it, really, isn't it? What do we mean by true and fair? Well, come on. Basically, it's right, don't we?
Not a dictionary.
So, there are fundamentally four opinions. Four? I'm going to say four. Five, really. Let's go with five. The vast majority of them are what's called unqualified opinions. So they're saying without any reservation on the part of the auditor, these accounts, A, give a true and fair view, and B, the accounts are consistent with whatever the reporting framework is, be it IFRS or what have you. Yeah, so fundamentally there are no problems. 99 out of 100 get unqualified or clean opinions of that sort. The fun ones, of course, are the ones where you don't get that opinion. So emphasis of matter basically means there is something fundamental, or pretty significant, to which the auditor wants to draw the attention of the users of the accounts. Because unless you understand that, then the rest of the accounts may be misleading. So emphasis of matter is about drawing attention of all of the users to something fairly specific. A limitation in scope means that we had particular issues in certain areas of the accounts. So, for example, we were not able to get all the information we needed in relation to some big court case. So we're saying, in this bit, these bits are all right, but this bit down the end is too hard for us. for whatever reason. So we are scoping that out, as we'd say. So our opinion is going to draw specific attention to the bits where we were not able to gather the evidence that we needed. An adverse opinion, fundamentally, is that we do not agree with management about something. I've never actually seen it in practice, which is quite sad, really. But it's certainly possible. And then that too comes in two sorts. First of all, you can say that something is material, but only has an impact on some aspects of the accounts. What pervasive means, though, is that in some areas, the issue is so fundamental that we are not able to give an opinion at all. Or, frankly, we can give an opinion, and so we don't agree with you. Okay, so there are four distinct areas, and this is perhaps one of the more important parts of this session. So you could easily be asked to explain what an emphasis of matter was, what a limitation in scope of the audit report actually meant. So let's briefly run through that again.
Could you repeat the limitation in scope?
I could. Let me go through all of them again, in fact.
Right, thank you.
I don't think I've got a proper definition of them, really. What I'm saying about an emphasis of matter is the auditor wants to draw attention to some fundamental point. Do what I was saying about going concern, it could well be the case that we have accepted that a particular company is a going concern, but there's real doubt. So what you'd do is there would be a paragraph within the accounts that said the accounts have been prepared as a going concern, but, and then they'd explain why there was a potential problem. So we've got in the audit report then, we've got a specific statement that says we want to draw attention to this particular assumption. Because if you were to say it's not a going concern, there'll be a list of changes that needed to be made. You probably want to value your stock in a different way. You probably want to bring in a provision against debtors. A number of other things would come in as well. So you need to understand that assumption before the rest of the accounts can be said not to be misleading. Is that all clear?
Yeah.
Yeah? So it's getting something clear right up front about the way in which the accounts have been prepared. What we're saying about limitation in scope is slightly different. What we're saying there is that for most of the work, we've got all the evidence we need. But in certain specific areas, we were not able to get everything that we were able to find. Suppose there was a fundamental court case, which if it goes against the company, is going to bankrupt them. But the only way of getting evidence about the likely outturn is by asking the directors, and quite frankly, they've got their fingers crossed, they don't really know. If that was the only evidence available to you, fingers crossed bit, you might want to say that we are unable to basically support the estimates provided in the accounts for the outturn of that court case. Or it could be, for example, that there was no evidence to support the valuation of work in progress. We hope there was. But in some particular way, we couldn't capture all of the evidence that we need. So what we're doing is we're setting that bit to one side. We're saying our audit work was restricted because of whatever it was, but in all other respects, we're happy the accounts provide a true and fair view. Yeah, so a setting to one side process. So that's an initial assumption, that emphasis of matter. The limitation of scope says, don't know about that bit, this bit's all right. Okay? And then that adverse opinion fundamentally says that we do not agree. And the question, therefore, is what is it we don't agree with? Is it something which is so fundamental it means the whole of the accounts are, in our view, wrong? Or are we saying, this number you've got is 47, we think it should be 37, but whilst it's significant to the accounts, it doesn't have an impact across the accounts as a whole. So if it is such that it really invalidates all of the accounts, it's said to be pervasive. Good word. So our opinion distinguishes between what is pervasive, called out into the entire accounts, or one which is material, which means it's still significant, but it's not so large that it causes cast doubt upon the whole of the accounts. What I'm going to do, and I haven't got it with me, I'm afraid, I've got some examples back in Bolton of audit reports of each of these types. So I'll put them on the University of Bolton's Moodle, so you can go through those and see in practice what they would look like. So that might bring it to life a bit more. I should have done that. Okay, well, was that reasonably clear at least?
Yeah.
Where you're not giving an audit opinion, a clean audit opinion, then you're going to be using one of those fundamentally three ways of modifying your opinion. Right, and we're almost there. So I think I've dealt with that. So very pervasive means it's got an impact right the way across the accounts, but material means that it doesn't cast doubt upon the accounts as a whole. That except for thing is the wording. So you would say, except for the fact we fundamentally disagree with this part of the accounts, then the rest of the accounts provide a true and fair view. Okay, so you do that in both the cases. So this limitation is saying, except for the fact we couldn't get any evidence on this bit, then the rest of it's okay. Under disagreement, except for the fact that we think it's 37 and you put 47, but we agree with the rest. So that's where the except for comes in. Okay, and that was that. So we've got about 20 minutes or so before we need to turn to the assignment. So that gives us just time to do something called fantasy fashions. So this really is a two-stage. You should have something that looks like that. Yeah, fantasy fashions. Sorry, Pinkerton and Company internal memo it starts. Fantasy fashions, 4 sides and all, half a minute. You got it?
No.
Oh.
Just one question.
Just set everybody up on the assignment and I'll come back to sorry, on the exercise and I'll come back to you. So basically what this is doing is pulling together the audit evidence that we've obtained. And you'll see that when you go through it, that there's a particular issue about some t-shirts. And there are 2 questions at the end. First of all, do we need to do any more work? So this is going back to our completion stage. And then it's asking us, as a result of that, or as a result of what we know, how are we going to modify our audit report? If we need to, that is. Have you all got the pieces of paper? Fantasy fashions, background. Somebody nod at me, you have. Yep, should be 4 sides and all. Okay, so can you have 10 minutes, perhaps a bit more, just to make sure you understand what the issue is? The first question, and here's a hint, it's all about the valuation of the t-shirts. So have a look at it, see how significant you think the issue is, work out what, if anything, more we should do, and then, are we going to modify the audit report? And as I say, let's have 10 or at most 15 minutes on that, and then we'll run through it together, and then we'll turn to the assignment.
Somehow the company was not follow it's supposed to be like the company X. Then how the auditor deliver the message to the company to follow the requirement, assuming like fixed asset justification or capitalization, they are not following that. Maybe they're following the takings or so on and so on. And how the auditors deliver the message to this company or directors.
I mean,
is anyway that maybe it's management later, but not cover.
It is. I mean, the first thing you need to do is put in place a series of tests to make sure you understand what's been going on. You can say, these are all of the things that are going on in the year. And so we try and get a value for how different the hours were from what they should be. Then you go to management and say, well, this is wrong, this is why it's wrong,
Yeah,
and
in
you
order
need to
they are
change
not
it.
follow, yeah, in order them not to repeat in
Yeah,
the next
absolutely,
following
yeah,
years.
that's right. So there's obviously a weakness somewhere. I don't know why it's gone wrong, it might be lack of understanding.
Yes.
And you say, well, what implications does that have? If you count the applicants wrong, you need to change. And then at the end of the process, 2 minutes ago, I seem to call it 260. But basically, it's just a letter which summarises everything we found. Even if a change has been made, you'd still go back through this report and say, in the course of the audit, we found X, Y, and Z had gone wrong because, and an adjustment of X pounds have been made to the draft accounts, and the following media action has been taken. And so the directors will then say, well, okay, this has happened over the years, we've put it all right now, and there's no further work to be done. Or they might say, in some cases, it's not as clear as that. They might say, well, actually, there is scope for disagreement here, because with capitalisation, it's not entirely clear whether what needs is not capital. So the company may have to review about what's capital spend, and not just say it's 50% right. So you'd say there hasn't been an adjustment, and then it depends on just how material. But basically, what you say, you're trying to get your hands around how significant the issue is, and then you report it, both to management and in this annual report as a result of the work of the audit.
What is the correct?
Are you okay?
What
Lower or net realize very simple non-moving. Kenapa?
You know the Mantism thing that I've used to get all of the handouts?
Yeah, no bottle.
That you might portal, yeah. What have you got access to on that?
What?
Because I mean, Mudbanks, the answer to Mudbanks is on that.
Yeah, it is. It's on there.
Right. So can you get that too?
We have no bottle.
Yes,
So it's supposed it's in the
No, the answer is on there.
but not back there.
But
But so you
question
have
is there.
to make it green first.
Right, okay.
Yeah.
I don't know how to do that, I'm afraid, but I'll get the...
You can do now. We know.
Yeah.
We know. Yeah.
Good.
It's in the
In a few minutes.
Yeah.
She's going to press green.
Yeah.
So that
No,
will give us
sir
access to
needs-
Mudbank's answer.
Sir needs to make it green for us, so it will be this.
It's all sitting there, but you haven't been given access to it. So we have to give you access by pressing green.
Yeah, the traffic light there, you know, the traffic light. There's a traffic light there, red and green. You have to press that.
Right. We'll do that in a minute. It'll be fun, that will.
What about this one? We don't have this, right? So
You don't
this
have the answer.
Yeah.
for this.
There isn't an answer, that's why.
All right.
We're going to make it up, and we're going to write it on the board too. But in my handwriting, which nobody can read. It's a shame, isn't it? What can you do? If you had a chance to read this thing, we probably need to rattle on with this, really. Because we've got a problem, really, haven't we? This Mr. Green guy's a bit of a bully, really, isn't he? Don't think we like him a lot at all. But he seems to think that these T-shirts are worth £6 each. And presumably, because we've got the accounts here, we've got £117,000 of them, £2,500 of the rascals at £6 a piece. Are you okay where I've got that from? So on 13.2, second page, right down the bottom, it says the t-shirts cost £2.70 each to make, and have been valued in the accounts at £6 each. And then in stock, it's got £117,000 worth of t-shirts. And that gives us £132,000, which is the figure in the balance sheet on page 3. So we've got an awful lot of t-shirts in the accounts. Right. Does anybody happen to know what value should be placed upon the t-shirts, just in theoretical terms? If I said the lower cost and net realisable value, would that mean anything?
Lower cost and net realisable value?
Yeah. So basically what the standard says is the most you can carry stock of this sort at is what it costs you. Because if you start valuing them at £6, you're basically taking credit for having sold them. So you've got £3.30 per t-shirt. We haven't sold them yet, so you're getting a bit carried away there. So one thing is clear from this is that's wrong. And what this goes on to say, I'm sorry, it's a bit hard this bit, you're actually only allowed to carry them at a value which is the lower of cost, which would be £2.70, or net realisable value. So that basically means if you have to sell them for less than they cost you, tough. Each individual t-shirt you have to value at that lower price. So what does that mean in terms of the audit work that we need to do here?
So we need to find the cost value?
Yeah, basically means what we need to know above all is what are Fantasy going to do with these t-shirts? And in particular, are they going to be able to sell them at all? And if so, for what price? Yeah, so the more work is going to be written big and clear. One, can they be sold? Two, at what price? How do you think you might go about doing that? And we've got one or two clues, but no more than that really. Mr. Stevens has said a number of customers have expressed an interest in the garments, but he admits that no firm orders have been placed. Right. So I would want to know what those additional inquiries were all about, what sort of value they were at, what people interested in buying them off that. This t-shirt, default, are actually a condition that they can be sold at all. Yeah, so can they be sold? I want to know about the quality of the t-shirt. And I want to know about the inquiries. And I want to know about the price. So before I agree these things have got a value at all, I want to know, one, are they of a proper saleable quality? And what evidence is there to prove that? You probably go a lot in practice, wouldn't you? If they're just a very different shade, different from what it was that whoever they were wanted, giant, well, it'd still be perfectly saleable. But first of all, are they of a merchantable quality is the phrase? Are they good enough to sell? Secondly, I want to be sure that there really was interest from potential customers. And if there was interest, I'd want to know at what price they were likely to be sold. And with all of that evidence, I would then want to say, right, what price am I likely to be able to sell these t-shirts for? And then we say to ourselves, is that price higher than what they've cost us so far? So suppose the answer was, yes, we can sell them, but only at £2 a piece. The proper value for these 19,500 t-shirts is just times 2, is £39,000. And I will be saying to this company, I will only audit, or will only give you a clean audit opinion if you revalue all of these t-shirts at that £39,000. Okay. So for me, that's the gist of what I would want to do, certainly what the additional audit work is. So 3 main areas. 1, quality of the t-shirts. 2, the nature of the, and 3, the price. Yeah, and that's the focus of the additional work. The second, I'll skim lightly through this because time's getting on. The wording of the audit report, it depends. If what we are saying is all of those are satisfactory, we work out that £2 is fair, we restate the accounts, and fine, I haven't got a problem anymore. We can give them an unqualified opinion. But at the moment, we're talking about £39,000, they've got them in at £117,000. Which is very different, £78,000 different. So I think at the very least in your audit report, you'll be saying, and if you can't be satisfied on those, that we disagree with the valuation of stock. And that figure is so big, that 78,000 for Fantasy Fashions, it might be that you would disagree with the entire accounts. Because rather than making a profit of whatever it was, £36,000, £60,000 before tax, if you've got to put a provision of 78,000, they're actually making a loss of £20,000. So this stock is fundamental to the whole way in which you look at Fantasy Fashions. So if you couldn't get agreement on this, I think you would disagree with the whole accounts. You have the right then to say, we think a proper adjustment is 78,000 or whatever, and therefore we do not believe, as presented, the accounts give a true and fair view. Do people follow that, or shall I say it again? One more time? One more time. Right. What we're saying then is that what is wrong with this audit evidence is that it doesn't support the value placed on the t-shirts of £117,000 because that is overstated. We don't know that we're going to be able to sell them, and they're valued at £6 each. What we want to know is, can we sell them at all? And if so, at what price? So I would want additional evidence about the quality of the t-shirts to make sure we can sell them, or perhaps that we can't. And then, if we can, to know what price we're likely to get for them. And when we've got that, we'll need to make an adjustment downwards in the value placed upon that stock. So, 3 areas for further audit work: quality of the t-shirts, the nature of the inquiries to make sure there really is genuine interest in selling those t-shirts, and finally, at what price we may be able to sell them. Yeah, and then depending on the results of that, if a proper adjustment is made to the accounts, they may then be a set of accounts we can give a clean opinion on to say it does present a true and fair view. But if no adjustment is made, we would say that we do not agree with the value placed upon t-shirts. And I think that's such a significant issue, we'd probably disagree with the accounts as a whole. Okay.
Can this question,
Yeah.
audit opinion
I think it's more than emphasis of matter, because it's just wrong. We're not saying they've made an assumption which may or may not be correct. We're saying we fundamentally disagree with the whole basis upon which that value is being drawn. So we'd say, except for the value placed upon stock. The rest of it's okay. Or we might say it's all a bit wrong. Yes, we'll use exception.
What? Oh, this is how this.
Again, I hope that's been clear from the board. I will, again on the Bolton rule, put a short note in giving the bones of that answer. But that will be weak.
Thank you.
What you need to do then is work out how to access it. Right, 3:35, 25 minutes to go. Let's have a look at the audit assignment. I'll give you a second while I find it. So there are 3 documents here. The first is in the same format as the one we were looking at yesterday. And let's just go through sweating a few things. I call this an audit simulation. Basically, we're going to get together in teams, and I think it would be a really good idea if you can work out who you're going to work with today for preference, right? So the idea is that 2 groups of 2 or 3 are going to be a small audit team. Okay? And then what we're saying is there's some financial statements and a set of information about a company in the 2 documents that accompany this. Using that, what we're going to do is develop an overall audit plan. So what you'll need to do is work out from that information what are the main risk areas that the audit needs to. Okay. In addition, we're going to provide a general audit, might well look a bit like the one we considered earlier. And then, secondly and finally, we're going to, I've asked you to produce a detailed, where is it? Audit testing schedule for sales and receivables. So we've got an overall plan which identifies the risks and what we're going to do about them in general terms. And then I want a detailed plan that says, right, we've got figures for sales and receivables, debtors. What is specifically, how is specifically we're going to test those? And it may be relevant to note that Vassan is going to be taking you through some more detail about the audit of the sales cycle. So that might very well come in handy. Okay, so I hope that you should have at least some idea from what we've talked about today about the general audit plan and about identifying audit risk. And it may well be the case that more detailed information on the audit of sales becomes available in the next week or 2. Okay, so we'll go through this one more time. We've got teams, as it says here, suggested a maximum of 3, but either 2 or 3. The role of an audit team, we're going to get some financial statements and a statement of background information. And outside the scheduled lesson and tutorial time, we need to analyse that information. And the audit partner, who's not one of your team, has said that he has some concerns over the sales and receivable figures within the draft statements. So what you need to do is to prepare an overall audit planning document for the audit. And particularly, the thing I'm particularly concerned about is the way in which you identify risk. So just like, is it Potter, the one where we went through, it was mud banks, wasn't it? To identify what the risk areas were. Where do we need to focus in to make sure we've picked up the dodgy or potentially dodgy areas? So we've got general audit plans of risk, and we've got a detailed schedule showing how we're going to audit sales and receivables. Just been taking your name in vain, Batsan, about the audit of sales and receivables. detail.
You mean the cycle?
Yeah, you're looking at the cycle, aren't you? But what the assignment calls for is a detailed testing schedule for sales and receivables.
Okay. The audit program? Audit program?
I want a series of specific audit tests.
Okay. And also, I will also go through on the flow audit flow.
Okay, yeah, no, that would be good as well, because that'll put the thing into context.
That means what to look into, what is the supporting document to cite it.
Right, great.
Sorry, I would like to know this one, because we're doing in a group, right? So it's like one document, is it, for each group, or do we have like each
No,
one
it's
of
one,
us?
it's one per group.
One per group.
So assuming you've already contributed to your group, you'll all get the same mark.
Okay, so that means when we want to submit our assignment, do we submit like the same copies to
Yeah,
you?
well, providing it's clear, then one on behalf of the whole group would be quite, so I don't want 3 copies of the same thing.
All right, okay, so it's one person who's
Yeah.
going to submit.
So just, if you can, make sure that if you are the person who's been nominated as the person going to do the submission, can you be absolutely clear who is in your group?
So we'll put it in the title page?
Yeah,
Is it
good.
possible?
Yeah, wherever.
Talking about that, does Bolton give us title pages, that a specific title page? Like Mendisa, when we were doing, we had specific, no.
Don't ask me hard questions like that.
Don't
Don't
ever.
know, sorry.
Okay, all right.
I'm not very good at this IT stuff. You may have noticed this.
Right.
One more thing.
Do you know, Basan? Is there a specific title page?
No, normally, previously, they use they just copy the Bolton symbol, and then this normal, just like normal. So that means you, as long as it's a title with the Bolton symbol, use the symbol, money. Anyway, crowd page has no marks.
No, I just want to know.
Doctor, there's one question I want to ask you on the question you are required, the assignment question. Right? You said here any areas, that means how many areas you can, the student can put?
Yeah. I mean, I'm not necessarily looking for everything which is absolutely comprehensive, but I would look to see and look for a bare cross sample, so 5 or 6. 5. Yeah, something of that sort.
That means like sales, purchases, balance sheet, and
Well, no, you will find, I don't think I need to go through the background information, but there are 1 or 2 areas which look just wrong, really. So there are 1 or 2 areas that expect everybody to come up with it. I'm not looking for you to make them up. I think there are specific risk areas that are things you should be able to identify with this information.
And then at the end, you just copy and paste
that means
it.
not the whole balance sheet becomes like.
Oh no, I'm looking for general risk areas which apply to this particular company.
Choose somebody from Joe.
And then as you say, I want to tell testing schedule for sales. Can we just go through very briefly the other 2 documents? No, look, we're going to see if we can change it all to green. We're looking to change it all to green.
Huh?
Aren't you?
Go ahead. Sedu.
Traffic light.
Yeah, traffic light. Sedu. Sedu. Change it to green.
Traffic light.
Traffic light.
Is it true?
Green.
It's very green there.
No, there's some.
I don't know how to do that bit. Nobody's taught me about that bit. I just wanted to show everybody while we're all together what it is that you're going to be looking at to identify the risks. So this battery supplies company, it comes with a set of financial statements like this, and this has got what, 1,000 pages? Yeah, so it's a set of accounts together with some remaining notes. And that looks to me as though it's just a sort of thing for management purposes. That's not part of a set of statutory accounts. Yeah, so you'll find 1 accompanying document which gives you all of that. And then you get a sheet on general background information. Which is this one. Okay, so it's just 2 sheets of that. This is a really good sheet instead of finding out particular risks.
You want to show everyone.
wants to give up.
So in going through that, you'll see a number of things which have got audit implications. Okay. So those are the things in your groups you need to be looking at closely to say what particular issues here may need a response in our audit. So that sounded pretty confusing, but I think it will come clear when you start to look at it. Traffic light person. Do you know how to click on it? We've now been through everything on this, so as far as I'm concerned, everybody can have access to everything.
Click on the
So which one is it?
the red light is down there.
All green, but this is not it.
Isn't this clever?
Is it the which one is this?
It's all three of them.
Okay. Yeah. So we can start.
That's it. All done.
Yeah, done.
Gosh, that's clever. So everybody should have access then to all three of the documents I've just been talking about, as well, of course, as the assignment from yesterday on performance measures. Has it worked?
Yes.
Got assignment, right?
You have one new file.
Yeah.
Which one?
That's the one, the mud, what, the mud.
Yeah. The rest.
Audit.
Oh.
That's the one, right? That's the one.
Just like
The
the
fantasy question.
Oh yeah, that one not yet upload. The assignment.
Without is in there.
Assignment got ready, right? Yeah, got ready.
Only the rest of the question, the answer, the subject answer sheet.
What industry? The fantasy version.
Yeah.
That one
That
don't
didn't have
have.
it.
That
It was
one
Mudbanks that people
Yeah,
were talking
Mudbank.
about. Mudbanks
That's the-
had an answer that
that's
you
the
weren't
one
given
I-
access to.
How about those yesterday one?
Again, they did come with answers. Some of them we photocopied at the time, didn't we? But there's no earthly reason why they can't all go to green, except I don't know how to do it. Vassan, is it possible that we could get somebody to go through all of the things and make sure they're all green, perhaps tomorrow, so that everybody has access?
No, it's already clear.
Is everything green now?
The other one, I'm not sure yet now, but you can see it here.
Yeah, they
Right
are.
now.
What are they?
No, the management accounting.
What
All
are
are,
they?
Everything's
yeah,
green.
everything is there.
No issues, you finish red and I can put you in the green. But
Is
it's
it there,
not my
management
mistake.
accounting? The one yesterday's one? It will be in a different folder, not the same with this one. Got it's here. What's the questions and answers? It's all there.
Using this one.
You got it?
Yeah, but
I don't know what.
You got
Are we in
it?
business?
Yeah.
Are you happy? Everything's available? Yeah. Can't be that.
The auditing one, right? The auditing one, the assignment.
Yeah.
So we have to find a company, right?
No, the auditing one, no, absolutely not. You know the two handouts that come with it on
The assignment.
battery supplies?
Yes.
Yeah. You're looking specifically at battery supplies?
Oh, so that's the one that
Yeah,
with
yeah,
the
yeah,
battery supplies.
Yeah.
Okay, so they're using
So was everybody not clear on that? It's specific. Right, I better say it again in that case. Just so there's no confusion, when you're doing your overall audit plan and your detailed testing schedules, you're looking at the audit work needed for the company, which is explained in the two handouts, which I think is called battery supplies.
Right.
Yeah, so go through, first of all, the financial statements, and secondly, the background information document of right, which issues here potentially could be significant to my audit. So what risk is there? And then secondly, what are we going to do about it? What's our audit response? So the audit plan is for the audit of battery supplies. So I perhaps didn't make that entirely clear. Is that clear now, anyway?
Yeah, it is.
Yeah? Everybody happy?
So
Yeah.
for this assignment,
Yeah.
just now you mentioned we need to form a group.
Yes.
How do we do that?
Go up to somebody you like the look of and say, would you like to be part of my group?
This one.
The question is, does somebody you like the look of though? And that's the really tricky bit I can't help you with.
Yeah, but only for this assignment.
Yeah, you don't have to live with them forever.
So okay, just now you did mention okay, let's say 2 people in one group.
Yeah.
Then
Good
two or
day.
three. Okay. So can be
No, I think that's too many. Because otherwise, you can have one person who doesn't contribute much. I think 3 gives you a chance. The idea is just to be part of an audit team. So an audit plan does come out of the work of the 2 or 3 people who are going to make up the team. But I think 3's enough. So can I leave it to you to work out who's going to be the teams?
No idea.
got
anyone? Got anyone?
Just choose them. Yeah.
You got any
I mean, I know
group?
you've never left.
I'm the team lead one.
Not all get that. Look,
Sure.
Okay, I got my team.
I'll leave it to you if that's all right. So I'm not going to
So I
try and
got one
set
lady,
teams
so
for you
fine.
because it doesn't seem necessary, really.
So okay, only one person in the team to submit the assignment.
Yes. I'm hoping though that you'll all, what you should, make sure that everybody contributes both to the plan and the detailed schedule. But the idea is that we're
One
going to
person,
mark
the others get
joint
marks.
work of all the group.
Okay. So the marks are
Yeah, everybody in that group gets the same thing. Yeah.
One person will all the when you do, you only do. Others will pass, if you pass. Others
Is
fail.
there anything?
So actually, we need to present one full audit report for the company. Just now you give the sample, right? It's the audit report for.
Yeah, okay, so I'm looking for audit plan. Yes,
Okay.
so for battery supplies, each group is going to produce 2 documents.
2 documents.
One being the overall audit plan, and the second, detailed tests that we're going to do on sales and receivables. And so the audit plan may end up looking a bit like the one we were having a look at earlier. And the audit tests, I expect, will be closely guided by Vassan. At least I'm sure he'll have a helpful input at the very least.
So working schedule only do for the sales and the receivables. Right? The audit schedule.
Yes.
Working schedule. Audit working schedule only do for the sales and the receivables. Yes.
Sales receivable is example. You can do for sales and 2 3 items.
Not necessarily sales.
Not only sales, and if you can do for asset, fixed asset. You can do depending on the business.
So I'm not being very clear here. I'm looking for the overall audit risks,
Overall,
which attached to the audit as a whole.
no, it's asking
But then I want detailed tests only on sales and receivables.
only on sales. and-
Yeah. So, for example, the detailed test might well include, is the total shown for debtors consistent with the nominal ledger? Something of that sort, and then perhaps something about debtors, for example. So there'll be quite detailed tests. But the rest of it is audit risk. Just like we were saying earlier, there could be an audit risk in the earlier example that the operation wasn't going concern. So that would be quite a high level audit risk. So we're going to have 5 or 6 high-level risks as applied to the audit as a whole, and then a series of detailed tests which go back to sales and receivables. Okay, can I just have 1 or 2 minutes? I mean, obviously we've finished what we hope to get done this afternoon. So first of all, thank you all very much for making it enjoyable for me. I hope, well, we got there, haven't we? It's 4 o'clock on the Sunday, so that's good. So I hope that I've been able to get across, well, in a way that, you know, at least you understood most of it. I've put my contact details on the board here. So that's D for David, N for Newman, and then the number 3 at bolton.ac.uk. So if something comes to mind, do drop me an email and I will try to come back to you. I hope you're fairly clear too about the assignments, fingers crossed, but I know you're going to receive further support. Clearly too, this weekend has only really been the way of kick-starting the whole programme, which we're now going to pass over to your local tutors. So my thanks and very best wishes to them and to you for that process. I'm sure they'd be happy to answer any detailed questions that you had that come to mind about this as well. So good luck. Look forward very much to receiving all of the assignments and very best wishes for the rest of it. And the good news for me is that those who are with us in a year's time, you get me on advanced auditing in March 2016, which seems a long way off.
Oh, that's a long way.
So, and also good luck too for those with long drives ahead of them this evening. Rather you than me. But thank you very much. Sorry, Bassam, was there anything you wanted to add?
The issue is because the group, let's say, it is formed into 3.
Yeah.
Some of the group may have 2 members.
Yeah. I don't mind if it's groups of 2 or 3.
But it should not be more than 4. Right?
No, well, I don't think 3 is enough. We'd rather not have any members at all, not any groups at all before. So,
So then how do you know who is different?
I would like, well, when it comes to submit the assignments, the person who does that submission is to write the names of all the members of the group on the sheet.
The rest. Yeah.
You need to be clear who's in the group, because obviously they already have that mark.
This one, how many words, sir?
How many? 2,500, sorry.
Same, all right.
So it's 2,500 maximum. But I don't think you'll actually need that. You know, there's no prizes for using 2,500. What I want is what the risks are and why. So that's as many words as it takes. But please don't go over 2,500. Okay, and it's the same submission date, which is the 10th of May.
10. Really?
It is a fully typed assignment, right? It is not no diagram. You are not allowed to put diagrams. How about the appendix? Can we
Just point by, is that necessary? Point by points or elaborates whatever we can elaborate?
I don't really mind what form it takes, providing it's clear.
Why is a report, right?
Well, you can set it up as a general report, but for example, when you come to the detailed audit tests, what that looks like in practice is, 2 columns. Test number 1, we are going to do this, and so that sort. And so it would be a series of instructions. Because the way an audit program is set up is a set of instructions, really, to the member of the team. So choose X invoices or whatever it might be, and do the following tests to them. Okay, so don't get too bogged down in presentation. What I really want you to demonstrate is that you understand what areas might potentially be risky and need us to review as part of our audit. Right, good. Thank you again.
Thank you.
I'm sorry.
Do I turn this rascal off? But just turn the whole thing off.
And then we try to elaborate the things on the financial statement. I don't understand like
go to the